Hi, this is Charles Kelly, Money Tips, author of Borrow and Grow Rich. I wanted to give you a quick update today on the state of the markets, the stock markets around the world, which are actually crashing at the moment as I speak. I can't show you the screen, but if you look at a typical screen where you've got all the FTSE and the Dow Jones and the Nasdaq, and normally you just look at the screen and the prices are static. But at the moment, they're just flashing because they're moving all the time. So if you look at live prices, you'll see that they're flashing, they're changing, they're going down still. Just to give you an example, as the market opened today, this is Thursday, I'm recording this, the market's dropped 3% or 300 points. And that's billions of pounds. That's probably something like 40 or 50 billion pounds wiped off the value of stocks. The Dow Jones was down nearly 700 points by 2%. So that's multiple billions wiped off that market. And, you know, this is not just a temporary thing because of what you must know, Putin invading Ukraine. This is part of a wider problem with the markets that I've been talking about for several months, that they are overpriced. They've topped out as far as I'm concerned, and that they're due for a correction. And as I was saying last year, it only takes that final straw that they call the straw that broke the camel's back, or the final thing to prick that bubble and set it to burst. And this is normally a thing like a war, oil prices going up, recession and that sort of thing, and consumers not having enough money to spend. And that's what I think is the wider problem of the market. Because the FTSE is down over 10% since January, and the US S&P and the Nasdaq, which is the tech stocks, are also down around 10% since their peaks late last year. So we're moving into what's called correction territory, a correction of the market. It's not a crash yet, but I could see one coming. But we shall have to see. I think the wider problem is going to be caused, for instance, by oil now reaching $100 a barrel. Oil and fuel and petrol affects everything. And we know that prices are going up in the shops. Inflation is reaching record levels. Well, I say record levels not seen since the 1980s in the UK, in Europe, and in the States, where inflation is over 7%. In the UK, it's over 5%. So things are getting tough for people because gas prices have already jumped. And people are already feeling it in their pockets now, because some people have found that their gas and electricity prices have doubled, in the last few months. And when the price cap that we have here ends in April, a lot more people are going to be affected. I was quoted for one of my properties, £400 a month for gas and electricity, and whereas I used to pay £150 a month. What you've got to remember with these direct debits is that what you're paying each month, what they're collecting, may not reflect what you're using. So you can end up at the end of the year with a deficit or credit. But they're supposed to know, they're supposed to work out roughly what your usage is. But, you know, a lot of people could be in for a bit of a nasty shock this year with gas prices. And already people are wondering whether they can heat or eat, because food prices have also gone up. And that's likely to go up further, because Russia is one of the biggest producers of wheat. It also supplies a lot of Europe's natural gas. Ukraine also supplies natural gas. And this is why prices have soared already, because the market sees that things are going to be disrupted. So the spot price of things, the market says, right, we're going to have a disruption here. Let's put up the spot price. So it's a bit like supply and demand. And that's what's happening to what they call wholesale gas prices, and there's nothing that consumers can do about it. You know, they're sort of stuck in the middle in the crossfire, literally, and they're just going to have to bear and grin and bear the prices. But I'm telling you, a lot of people are going to be suffering. And even if you look at the higher income end, where you say, well, it doesn't matter to me if prices go up 100 or 200 a month, then it's still going to be less money in their pockets. And, because they're going to be paying more for petrol, even fares have gone up. And as there's less money in their pockets, they'll have less money to spend. And that means that business will be affected. and that then starts to drive the economy down and into a recession. And this war, because it is a war in Europe now, is definitely acting as a catalyst towards this, and maybe pushing the market further into recession. The markets in the last week have been dipping, and then Putin says, no, we're not going to invade, and then they go up a little bit. But I've always suspected that they are going down. Incidentally, gold and silver prices have gone up. I think silver went up by about 3% this morning, and it has been rising a few percent every day. So money is starting to move into the precious metals, the safe havens. Bitcoin dropped down to 35,000. Again, I don't see Bitcoin as an investment. Maybe I'm just old-fashioned, but it's more of a speculation thing now. And it's a bit like the great stock market bubble of 2000, the tech bubble, where people were just paying silly money for tech stocks on the basis that in 10 years' time they were going to make money. People were rushing into this dot-com bubble as it became known. And of course, then stocks crashed. In fact, Amazon went down by about 90%. So that would have been a good buy in the year 2000, 2001. But there will be opportunities when stocks fall. There will be opportunities to buy good companies, proper companies, good, solid, money-making companies that make money over many years, and there'll be opportunities to buy those at a discount. They'll be on sale, which is what value investors like Warren Buffett are waiting for. They're probably rubbing their hands together now, saying, great, now we can use some of this 150 billion that we've got stashed in our banks to buy stocks. So there will be opportunities. Now, I want to mention a bit about property, because people think, well, property's immune because there's plenty of demand and there's a shortage of property. But I've heard this argument over the years. As far as I know, in the UK, there's always been a shortage of property since about the 1970s, 80s, when they stopped building government council housing. I feel there's always been a shortage of property. There's never been enough property built to cope with demand, and the population has been going up, of course, because of people living longer, higher birth rates, and immigration, of course, where immigration has added at least 5 or 6 million to the UK population. So property has always been in demand, but it doesn't mean that it's always going to go up. It can go down according to the demand at the time. It just doesn't mean because there's a shortage of property, people will sort of pay anything for that property. And property prices in the US could have peaked, according to some commentators, after a 20% rise in the last year. But this is as higher mortgage rates are already starting to bite and already starting to make it more expensive to buy property and to refinance property. Rates have gone up in anticipation of the Federal Reserve increasing rates very soon, and they may increase rates by 0.5% or twice in this year. UK average prices, however, in February were up to a record, by a record, 7,785. So they've gone up still, even though we've got higher inflation, we've got higher fuel prices, we've got all these things going on. Prices still seem to be rising. Now, apparently demand, according to Rightmove, has been driven by second steppers. These are people, second-time buyers who want to move up to a property with more space, and that's pushing up demand, particularly for the bigger houses, the 3-4 bedroom houses, as opposed to the small flats. And that sent prices up nearly 40,000 higher than in the previous month. So, yeah, prices are going up. In the UK, I think in February by 2.3%, and that they're up nearly 10% on the previous year, according to Rightmove. But whilst it's still buoyant, there's no doubt that higher interest rates are going to hit people and affordability, because clearly when rates are a record low, you can afford to borrow so much money that you just never dreamed of borrowing, say, $500,000 to buy a property. But when you look at the rates, you think, well, hang on, this $500,000 is costing me less than it would have cost, to borrow 200,000 when rates were at normal levels of 5 and 6%. But now these crazy levels have made it so cheap to buy properties that naturally it's fueling people to borrow more and more and more. And if you've got a property on the market and it's a desirable area, and someone says, well, I'll give you 600,000 for it, and then somebody says, well, I'll give you 650,000 for it, then prices go up like that. Also, agents go around saying, well, the market's busy, let's put this on at 675 and see what we can get. And then somebody comes in, they've got a cheap mortgage, yes, I'll pay that 675. So it almost becomes a self-fulfilling prophecy that the market is going up. But we shall have to see. Rates are now 0.5% higher in the UK than they were just in November. And there's no guarantee that rates won't go up again to curb this rip-roaring inflation. So do watch out for that. This is not the time to speculate. It's certainly not the time to buy stocks. I've been advising people to get out of shares for quite a while. And just be careful out there and look at some of my hints that I've put on my hints to survive the recession on my previous post. Look at those, how you can save money on lots of things and try and economize in every way. Now, as I said before, it's the end of the tax year is coming very soon in the UK. So that's on the 5th of April. So remember that you can still put 20,000 a year into an ISA to maximize your tax-free allowances there. And just look at some of my tips there, because you can save tax by and pensions and that sort of thing before the end of the tax year. Now's the time to talk to your advisor, your accountant, or whoever you take advice from, your independent advisor, so that you can save as much money in tax before the end of the year and maximising your allowances into your pensions and ISAs. Now, for people watching abroad, ISA is an individual savings account. It's like a tax-free account. I think you have similar sort of accounts in most countries where the money is invested in a tax-free wrapper. But I certainly wouldn't be looking at stock market types of investments whilst the markets are in bear market territory. So if you want to get control of your finances in 2022, we know that the habits of millionaires, billionaires are there. They leave tracks, they leave clues. So we can follow those clues to enable you to become wealthier and financially free over time. Not a get rich quick type of wealth. I'm talking about not just saying, well, let's put money into the latest cryptocurrency because I think it's going to go up 200%, and then I can sell it on to some other sucker in the hope that they will go up more. No, this is building wealth over time, and it's what I talk about in my books, in Borrow and Grow Rich and Yes, Money Can Buy You Happiness. And I've got some free training up there. You can have a look at that by all means. And I am launching a course very soon called The Smart Money Manager, Mastering Your Money the Smart Way. But have a look at that free training. I'll put a link up to it, and it will give you some tips on how to build wealth without pain. Actually, you can become financially free without the pain of doing it, without this thing, oh, if I save money, that's sacrifice. It's like when your parents give you pocket money and they say, well, save that into this little piggy bank, and to you that's sacrificing, because you can't use that money to buy goodies, you can't use that money to buy sweets. I might sound a bit old-fashioned here, but you shouldn't look upon it as sacrificing and lack. You should look upon it as investing in your future. We know that successful people take what's called the long-term view, the long-term perspective. They don't just think about, what am I going to do today? What am I going to do tomorrow? They take a long-term view. Just like if you were studying to be a lawyer or an accountant or a doctor, you're taking a view that you're going to be studying for the next 6, 7 years, maybe 10 years to reach the top in your profession. But when you've invested that time and money, you know that for the next 30 or 40 years, you will earn far above the average income. And it's the same thing when you're starting a business. You're not starting a business today in the hope that tomorrow you're going to make a fortune. You're taking the long-term perspective. When I started businesses, sometimes it took 2 or 3 years before I started reaping the benefits. And in that 2 or 3 years, I drew very little money. I was putting more money in, putting all my time and my sweat equity into that business. And sometimes you think, oh, what am I doing here? But eventually it turned around and money started to pour in, literally. So you've got to take the long-term perspective, and successful people have always done this. They've always taken the long-term perspective, And unsuccessful people don't. They just take the short-term view. I want it now. I'll just go and borrow. I want it now. I'm not prepared to save. I want it now. I'm not worried about the future. I'll just spend my money and live life and be happy, party. And they don't take the long-term perspective until it's too late. And then they end up retiring broke or in debt, in poverty, like, perhaps 4/5 of people do now. They retire more or less broke without enough money to retire. And some of them have to go on working into their 70s and 80s to make ends meet. Or they're just really literally struggling, sitting at home with 4 jumpers on, not able to afford to heat the house. And all these things are going on in a time when we've had the most prosperous period in our history. The last 40 or 50 years have been certainly prosperous, where people have climbed the ladder, and there's been more money around in those years than ever before. And yet people are still retiring broke. And when I was a financial advisor, I met a lot of people who said, well, I'll worry about that when I retire, or the state will look after me. Well, the government won't look after you. I'm sorry, they'll give you a basic safety net, but they're not going to allow you to live as you are living when you're working. And I saw this all the time with people, and yet people that took the long-term perspective and said, yes, I want to save for my future. I want to think about my future. I want to put the effort in now to secure my future. They were the people who were successful, and the people who took the short-term view were the people who frankly failed and were unsuccessful and are now struggling and paying the price for that view. So have a look at my free training, and I'll see you again with updates. This is Charles Kelly, Money Tips, bringing you money tips to help you save, invest, accumulate and enjoy more money. Thanks and have a great day.